China imposes 84% tariffs on US goods, taking effect on Thursday, according to a Chinese Finance Ministry statement on Wednesday. This comes after the US government announced an additional 84% in tariffs on all imports from China on Tuesday. This means China will be subject to a tariff of at least 104%. One expert believes that China won't hesitate to continue to retaliate.
If the United States wants to use maximum pressure against China, China definitely will launch more rounds of restrictions against the exports of rare metals to the United States. That will take a big bite on the American defense industry, and it may be too late eventually.
What if the most powerful weapon in today's geopolitical war wasn't a missile, but a bond? Right now, the United States and China are not just fighting a trade war, they're edging into a full-blown financial war. At the heart of this standoff, a trillion-dollar threat. China is openly considering selling off up to $1 trillion in US Treasury bonds. If it happens, it won't just shake Washington or Beijing. It could send shockwaves through every economy on Earth. Let's break it down. By early 2025, tensions were already rising. President Trump, running a fiery re-election campaign, accused China of currency manipulation, intellectual property theft, and unfair trade practices. In April, he upped the ante. US tariffs on Chinese imports jumped from 104% to 125%. It was the sharpest escalation in decades. Fact: the US imports over $500 billion in goods from China every year. These new tariffs effectively made half of that trade economically unsustainable. Beijing didn't wait long. China hit back hard, slapping 84% tariffs on over $120 billion in US exports, from soybeans and aircraft parts to semiconductors. The message was clear: if you hit us economically, we'll hit back harder. But this time, China had something even more powerful in its arsenal. China is the second largest foreign holder of US government debt, nearly $980 billion worth as of March 2025. Only Japan holds more. These are US Treasury bonds, the backbone of American government borrowing. And now, for the first time in years, Beijing has openly threatened to start selling. If China dumps even a portion of its holdings, here's what could happen. US bond prices drop, interest rates skyrocket, the dollar weakens, inflation surges, investment dries up, and a recession hits fast. Fact: back in 2015, China sold just $100 billion in treasuries. The dollar dropped 6%, and US borrowing costs spiked nearly 1.2%. Now imagine what selling $500 billion or more would do. Economists call it the bond bomb, and once it's detonated, there's no easy way to stop the fallout. For years, China avoided direct confrontation. It preferred quiet moves, currency tweaks, strategic investments, subtle diplomatic pressure. But in April 2025, Trump excluded China from a 90-day tariff suspension he granted to US allies, like Canada, South Korea, even Vietnam. Fact: while 17 countries were given a break, China was the only major trading partner left out entirely. In Beijing, this wasn't just seen as provocation, it was humiliation. a signal that economic war was now policy. And that's when China pulled the pin on its financial grenade. As rumors of a bond sell-off spread, markets went into a tailspin. The S&P 500 plunged 4.6% in 48 hours. The Nasdaq dropped over 5%. Investors began moving to cash. Bond yields surged. Global markets turned volatile. Fact: America's total public debt now exceeds $36 trillion. A 1% increase in interest rates could mean $360 billion more in annual debt payments, enough to destabilize the entire budget. This wasn't just speculation anymore. It was fear, the kind that echoes through every bank, every investment fund, every pension account. A collapse in US bond confidence doesn't stop at America's borders. Because the US dollar isn't just any currency, it's the world's reserve currency. If its value drops, everything from energy prices to global credit markets is affected. Fact: over 60% of global foreign exchange reserves are held in US dollars. Japan, America's top bondholder, is already holding emergency policy meetings. The EU has floated the idea of de-dollarization, preparing for a world less dependent on the greenback. We've seen this before. In the 1930s, US tariffs under the Smoot-Hawley Act triggered global retaliation and worsened the Great Depression. Could history be repeating? Scenario 1. The Grand Bargain. Washington and Beijing return to the table. Tariffs are reduced. China agrees to hold its bonds. Crisis averted. But it would take rare political courage and compromise. Scenario 2. The drip strategy. China slowly sells $50 to $100 billion every quarter. It doesn't collapse the system, but it keeps pressure on. A warning shot with each sale. Scenario 3. The shock event. A sudden sell-off of $500+ billion. Treasury markets seize up. Dollar dives. Panic spreads. Global investors flee. Central banks scramble. Recession becomes inevitable. Fact: in 2022, even a brief spike in yields caused a 17% drop in US tech stocks. A bond crisis could be far worse. This isn't just about tariffs or bonds. It's about trust, about how far countries are willing to go when their power is challenged. For Trump, it's about re-election in 2026 and projecting strength. For China, it's about national pride and avoiding submission. But for the rest of the world, it's about stability, inflation, jobs, retirement accounts, food prices. Every family, yours included, could be affected by what happens next. This is not just a trade war. It's a financial standoff at the highest level. The battlefield is global. The weapon is money. And the first to blink might lose everything.